Good evening, everyone. We are Good for. In this video, we are going to discuss about the financial statement, cash account, adjustment table, and also advise Tantari Ramri on his business.
Profit or loss statement is a financial report that shows how much a business has spent and earned when the company have made a profit or a loss.
If the company have made a profit, then the business strategy is working. However, if the company have a loss, then the company need to take a look on what problems could be, and the statement can cover any periods of the times, although it's most commonly prepared at the end of a month, a quarter, or a year.
Let's look at the statement in Mashmera Enterprise. The profit or loss statement is break into three key sections. The first one is revenue. This section includes any money generated from sales or services. This is the figure of the sales revenue. To get the net sales revenue, we use the sales revenue minus sales return and also sales discounts, which is this figure. Then we will get a net sales revenue of this figure.
The second section is the cost of sales. These are the direct costs related to the production and sale of product or service. It includes things like inventory and wages spent to manufacture goods or delivery service. This is the figure of the cost of merchandise sold of Masmera Enterprise. To get the gross profit of the company, we use the net sale revenue above minus the cost of merchandise sold. That is 500,000 and 40,535 ringgit.
The third section for the profit or loss statements of Masmera Enterprise is the expenses, which can also be called as operating expenses. These are the background costs of running the business and includes the things like rents, insurance, and so on. For the expenses of the Masmera Enterprise, we just need to total up or sum up all of the expenses such as the sales salary expenses, office supply expenses, and advertising expenses and so on. Then we get a total expenses of this figure.
Take note that the interest expense should be excluded from expense and is considered as the other expense. The interest expense is this figure. Right off the bottom will be the net profit or loss of the Masmera Enterprise. This is calculated by subtracting all the expenses from gross profit, and we will get the net profit of this figure for Masmera Enterprise.
Let's look at the owner's equity. What's the purpose of statement of owner's equity?
Okay, so the purpose of this statement is to show how the owner's capital has changed over the year. It details the beginning balance, any addition like contribution and net income, and deduction like withdrawals leading to the ending capital for the year. But how exactly does the owner's capital increase or decrease?
Owner's capital increases when there's an owner's contribution or when the business earns a net income. For instance, in this statement, there is a contribution of 159,569 and a net income of 680,000, which adds to the capital. On the other hand, capital decreases when the owner makes the withdrawal, like the 23,500 shown here.
Oh, so that makes sense, but why is this statement is so important?
It's crucial because it provides a clear picture of the changes in equity over time. This helps the owner or stakeholders understand how the business is performing financially, whether it's growing or facing challenges.
Oh yes, I also think that these statements are very important to a business organization because it gives more clear view for investment decision. It serves as a metric for investors and creditors to assess the company value and financial stability. So I assume that it's like financial summary of the owner state in the business, right?
Exactly. It reflects the owner's financial relationship with the business and ensures transparency in financial reporting.
All right, now let's take a look at the statement of financial position. Can both of you give us the view of financial position for better understanding?
Financial positions or balance sheet shows what the company owns and owes. It's a financial financial report cards, but for the company, it helps the external and internal users to understand the financial health of a business.
Okay, so in the financial position, there are three main compartments, which is asset, liabilities, and equity. Asset are what the company owns, like cash, inventory, and building, and so on. Liabilities are what the company owes to others, for example, like loan or account payable. And equity represent the owner's claim on the business after all debts are paid.
Yes, you are correct. To put it simply, the fundamental of accounting equations is asset equals to uh, liability plus equity and is always balanced. The asset are financed either through the debts, which is called a liability, or through the owner's investment, which is equity.
Oh, got it. So if a company has more assets than liabilities, it shows that they have a stronger equity position. And the balance sheet equation helps keep everything in check, right?
Exactly. It helps ensure that the company financial statement are accurate. It a key tool for investors, creditors, and management to assess the business stability and performance.
Thank you, you too. That helps clear everything up for all of us.
Hey, I've been trying to understand cash accounts better. Can you explain what is cash account?
Sure, a cash account is a financial account that tracks the cash inflow and outflow of a business. It shows how much cash is available at any time given.
So, what do you mean by cash inflows and outflows?
Cash inflow are the money that come into the business. This can come from sales, investment, or loans. On the other hand, cash outflow are the money that go out, like expenses, salary, and payment to the supplier.
Oh, that makes sense.
But how do this inflow and outflow affect the financial position of a company?
Well, they directly impact the company's liquidity. If cash inflows exceed outflows, the company has a positive cash flow, which is good for its financial health. Conversely, if outflows exceed inflows, it can lead to cash shortage.
So, how do we match this figure in the financial position?
You typically do this through a cash flow statement, which summarizes all cash inflows and outflows over a specific period. This statement helps stakeholders understand how well the company manages its cash.
That's really helpful. So, keeping track of this figure is crucial for maintaining a healthy financial position.
Exactly. It ensures that the business can meet its obligations and invest in growth opportunities.
All right, let's continue with part B, which is the impact on the financial elements. For questions A, depreciation is the systematic allocation of the cost of an assets, which is also an expenses in the income statement. The total expenses are understated by 35K because when the depreciation is omitted, it will increase the total expenses.
Okay, so since the expense are understated, the net income is also understated because depreciation is included under operating expense. Asset will also overstate because depreciation reduce the book value of office equipment and the delivery van.
For question B, salary is known as a liability in the balance sheet. So when salary is omitted, the liability will increase because the company owes this amount to employees. So the total liabilities are understated by 20K.
Salary is also an expense in the income statement. The total expenses are understated because salary represent costs incurred by the business to compensate employees for their work.
Don't forget that when expenses increase, the net income will decrease. So the net income will be overstated in this process.
In a question C, the office supply on hand was 300. We need to determine the supply used in the business by using the beginning balance minus supply on hand, which is 4,000 minus 300. And we will get a 3,700 as the supply consumed during the period.
Yes, you are correct. This process matches with the matching principle because we probably slide the expenses with the period in which they are incurred. The office supply is reduced to 300, therefore the total assets are overstated by 3,700.
Does the process also affect the other financial statement?
Yes, in the balance sheet, the expense is increased by 3,700 while the net income decreased. As a result, the total expenses are understated and net income is overstated.
Okay, let's now continue with D. Unearned revenue is considered as a liability because the company has an obligation to fulfill the service or deliver the goods in the future. Based from the question, that the unearned revenue is realized, so it should be recognized as a revenue on the income statement.
I agree with you. This process reduces the liability as the obligation is settled and simultaneously increase the net income as the revenue is recognized. Hence, the total liability are overstated and the net income is understated.
What about G? What is interest revenue?
Interest revenue is an income earned by a business from investments or lending activities that generate interest. Under the accrual basis of accounting, interest revenue is recognized when it is earned and not when it is received.
Yes, you are right. In this situation, we should debit cash due to the interest revenue is earned and credit interest revenue. The total revenue and net income are increased in the income statement. As a result, then the asset and the net income are understated.
Oh, okay. Sorry. Let's continue our discussion on how Marshmara Enterprise can improve its credit terms and also shipping policies to support its expansion plans. I think one key step for credit management is adopting shorter credit terms like net 30 days. This encourages customers to pay faster and improve cash flow. Early payment discounts such as 2% per 10 days, net 30, can also be a great incentive to encourage prompt payments.
That's a good point. Shorter credit terms and discount definitely can help. But we also need to ensure credit is managed responsibly. One way to do that by conducting creditworthiness checks for all customers before extending credit. This minimizes the risk of bad debts and ensure only reliable customers are granted credit. To make it more efficient, Masmera Enterprise could use accounting software to track account receivable and send automatic reminder for overdue payment.
These are all great points so far. Now shift to the shipping strategy. I think the adoption of FOB shipping method would be effective. Under this policy, the ownership transfer to the customer as soon as the good leave Masmera Enterprise. And this means that revenues can be recognized earlier and is also reduce the inventory holding times, which helps to free up the storage for new stock.
That's a smart move, but inventory management is equally important. Implementing a just-in-time JIT inventory system will align purchases with actual demand, minimizing excess stock and reducing storage costs. At the same time, Masmera Enterprise could offer free shipping for bulk orders or customers who pay upfront. This would encourage large purchases and improve cash flow while keeping inventory moving.
I completely agree about free shipping. It's a powerful tool to drive sales and customer loyalty. Offering free shipping for orders over a certain amount or for customers who pay upfront is a win-win strategy. It not only encourages larger purchases but also improves cash flow by promoting prepayments. Additionally, free shipping can be marketed as a competitive advantage, especially in a growing city where convenience matters. By strategically using free shipping, Masmera Enterprise can attract more customers and maximize its revenue potential.
So to summarize, our recommendations for credit terms include shorter payment periods, early payment discounts, credit checks, and also automated receivable tracking. For shipping, we discussed about adopting FOB shipping point, offering free shipping for bulk orders or prepayments, implementing JIT systems, and focusing on strategies that boost customer satisfaction. These steps will help Marsh Merah Enterprise expand successfully while maintaining financial and operational efficiency. This is our video. Thank you very much.